The Hedgeless Horseman here. It's April the 5th, 2023. Hopefully this will be my most quick and concise rant yet about what an absolutely ridiculous layup slash no-brainer opportunity there is in the mining space, in commodities overall. But it's just, I'm about to lose my mind. I still today, it's like we had, well, gold was up a bit here, and now it's like minus whatever, silver kind of the same up, and you already see, like always on Twitter, it's like top callers, people debating whether they should own miners, should I sell, should I buy, whatever. It's like I see people having 50% cash or whatever. So I cannot for the life of me understand. It's like, what are they seeing? This is what I'm seeing. Here, you'll probably never see this many stars line up again in your lifetime. First of all, this is the S&P Commodity Index versus S&P 500. Does this say anything about the short term? Absolutely not. If you sold here, it went higher. If you let's say bought here, which is historically low, it went lower, etc., etc. And here it went higher and then lower, then higher again. It says nothing about even the next, well, certainly not the next day, not the next week, not the next month. These can be, this was obviously probably overvalued for at least, 6 months, even though, yes, it went exponential. Here we have a bottom here and here, yet here we're even lower. Now we're even lower than that. So if you just use this like an extreme, you would be buying, well, on that note, it would actually be a pretty good thing, because 2015-16 was actually around the bottom in the mining space. So literally, if you just okay, I'm buying this extreme here, we hit this extreme, almost hit this extreme, and you bought, yeah, okay, so if you actually bought in then, you'll probably be up now. Most people don't do that, obviously. They bought in the last top or whatever. Still, this is just an increasingly big no-brainer. Just because this kept going up doesn't mean that, hey, you were wrong because it's going up. No, it's getting worse and worse. Because what happened? This top was higher than this top. Yeah, the crash was even larger than this crash here, obviously. So when the rubber band snapped, or the reversion to the mean took place, it overshot to the other side even more wildly than here. So again, it says nothing about the short term, not next day, not next week, not next month, not even next year. What this is saying or suggesting is like, if you sell somewhere around in this neighborhood, sooner or later it's gonna look smart, okay? If you bought somewhere in this neighborhood, even up to this point actually, if you started buying here, for example, and just kept buying because it just got cheaper and cheaper. It's like, theoretically, if you like shorting, if you started shorting here and you just shorted more, that ended up well, obviously. But you could have started buying here. Buying, then boom. Okay, that's basically what I've been saying. It's like we're way past the point of selling. This is this sector can be cheap for a long time. That doesn't mean you don't need to pick the goddamn bottom. And this is a TSX Venture Exchange. One thing more about this, obviously, is that, okay, S&P Commodity Index versus S&P 500. I don't know exactly what goes into the commodity index, for example, but we know that S&P 500 is made up of the 500 largest companies in the US. Obviously, they need commodities. So it would be super weird, given that critical minerals or a lot of base metals overall are near, well, the LME is near 25-year lows in terms of inventory. So how on earth is S&P 500 gonna thrive, let's say, without using more commodities? That's gonna be hard. So it's like they have a relationship which is favorable for this ratio, obviously. Meaning that it's like, yeah, it's hard not to have a reversion to the mean given what we see in this, supply side of things. T6 venture exchange turnover. Okay, end of the bear bottom. Then we obviously had some pops, yada yada. This was, what is this, around, well, after, I think, well, TSX probably sucked a bit. But point is that, where is the big move? Where is the next big move gonna go? We know that almost nobody cares about mining right now. Nobody's in. The big move is obviously not to go from 90% not caring about miners to 95% caring about miners. Sure, it's going to have an effect. No, the big move is from nobody caring about the mining sector to everybody caring about the mining sector. That is the next big move. I mean, it's like where we are now. Well, let's take this bottom here. Maybe that was here. Yeah, it went lower. The next big move was up. And that didn't take too long. And just this alone here, that ended up being the best quarter in gold mining history, I think. So we know that the next big long-term move is going to be higher, because a glass can only get so much empty. The big difference is when it goes from almost empty to full. That's like hundreds of percent more water in the glass, if you know what I mean. I mean, if there's 5% water left, I mean that's gonna 20x to have the glass full. LME copper warehouse stock level, right? Okay, obviously critical minerals, they're running out. Some projections suggest that we might be out by August of this year. Visible inventories in copper worldwide. Is that true? Is that going to happen? I don't know. But the trend is such an obvious trend. And that's from, ongoing mines into production. I mean, this is recent. Well, this is reality, obviously, where we are now, and recent past. And you don't get mines up and running that quickly. So where's the extreme? I mean, it started off at about 350,000 tons. Now it's what, I don't know, 60, 65. It doesn't take too much to drop to zero anymore. That's about one of these blocks. I mean, this move here was like what, 3.5 blocks down here. That would have huge ramifications, obviously, if we ran out of copper. And it only takes a bit more than one block here worth of inventories being withdrawn to reach zero. Gold production, showed this before. Pretty obvious the trends. That's why they're acquiring other companies to get bigger and bigger, just to stay afloat, to have the same. I mean, if Barrick today versus 2006, okay, Barrick was almost, mining like 8 million ounces. They would need to add another current Barrick to have the same production as the same Barrick had, what's that, like 16 years ago? 17. It's not easy to grow or even keep up production if you get big. So those are some slides. It's like, I mean, imagine we're seeing all of these things coincide at the same time. Insane undervaluation. Critical minerals running out, which would suggest that the prices of said commodities should be higher valued, because the market is supposed to be forward-looking. I'm mostly talking about the juniors, of course. Why I think, I mean, the junior sector, nobody's aware of the junior sector really. I mean, that's the only conclusion I can come up with, because it should not be possible to have such a layup in juniors. I mean, no wonder capitalistic societies always ends up, turning socialist, whatever. Because if people just took advantage, or first of all, even had an opportunity to take advantage of such insanely skewed no-brainer risk-reward bets, of course some people are going to end up with all the money. Because the same reason that we as plebs can even go into the public sector and take advantage of these opportunities that are too good to even, they should not be true. There's somebody who's selling or not buying this. So they're missing out. But the few who have actually an IQ of above 60 or whatever, some common sense and patience, they can take advantage of it. And it just keeps on going. It's like, yeah, the COMEX gold is getting drained. Everything would suggest that, again, supply, the commodity prices, forward commodity prices are expected to go higher. That should obviously be reflected today, and it should be especially reflected in the supply of tomorrow, which is the junior miners, since we're not finding enough discoveries. And grades are going down. It's not just for copper. I think it's the same for silver, copper, gold, etc. And then we have, massive underinvestments, which means fewer mines in the future. And we're already running out of this, of copper, at least, from a balance perspective. And copper mines struggling in Chile, production is down. Gold miners relative to gold. These are not even the juniors, okay? These are, NYC Arca Gold Mining Index divided by gold price. And yes, they've been diluting and all of that, yada, yada, yada. But typically, and some people who say that, they're outperforming, etc. Yeah, sure, but outperformance is followed by underperformance, and underperformance is followed by outperformance. Because the imbalances get built up. If nobody invests in this stuff, the price of gold are going to go up. And the few mines that are left are going to be worth a lot because there's not enough supply. So it's easy from a logical standpoint to understand why there is something called reversion to the mean, etc. Because, like Rick Rule says, bear markets are the authors of bull markets and bull markets are the authors of bear markets. That's just how it is. So okay, let's just use some common sense here. Not rocket science, common sense. All these charts, do they say anything about the short term, where metals or miners, etc., are going to go in the tomorrow, next week, next month, and even next year? Or next 12 months, for example? Not really. For a short-term trader, these are pretty much worthless. Because you can't take advantage of them if you are short-term orientated. Because some of these reversions to the means might take X amount of years. But that's the big moves. That's the big money. The big opportunity in these are that they are extreme from a long-term perspective. And in order to take advantage of where all of these graphs are, the extremes, the long-term extremes they are at, and the long-term trends, etc., etc., the only way to take advantage of that and use it is to be long-term focused. If you're like everyone else who's going to trade every single, it's like today. Gold and silver. There's juniors down today. Some started down more because gold was down a bit more like an hour or so ago, and now they're up a bit. That's all short-term traders that are voting with their feet, and literally 95% of people that's voting with their feet every day they are voting based on what they think is going to happen literally tomorrow. If they think these stocks are going to go up tomorrow, they're going to be buying. If they think they're going to go down tomorrow, they're selling. Because, again, when the metals, for example, have already gone down a bit, and the stocks are already down, there's no point in selling them more because they if you believe they are so tied to the price of metals, it's already happened. But people will continue to sell, even though, they've already gone cheaper and reflected these irrelevant prices, for example, since these explorers won't even be in production in like 10 years. So it's absolutely meaningless. That's what everybody's doing. They're guessing where the stocks are going to go tomorrow. If you understood the importance of all these shorts here, and how you actually take advantage of that. Because let's face it, nobody that's a short-term trader makes any money. Most people on Twitter doesn't really make any money. Everybody will have an opinion. I mean, you can't put up a chart or whatever without getting an opinion. I know I beat this sector. So far. Sure, if I go down, I don't know, 98% or whatever, maybe one could say, hey, you don't beat it at all. I don't see that happening. But you'll get constantly bombarded by opinions, by everyone, by 100% of people typically. I mean, the funny thing is that, like, some of the few people I actually think are really good investors, they barely tweet. They barely comment on stuff. That's the interesting thing. It's like they're busy. They're busy winning typically. They are not looking too much for confirmation bias or whatever. They trust their own judgment. They don't need to convince anyone else. So, I mean, am I a hypocrite? No, I think I want to actually help people. I mean, all of this makes perfect sense, right? Long-term trends, multi-year trends. We're talking big moves. That's where the big money is. And if somebody said, yeah, I see this, but I'm going to do it short-term anyway, short-term, try to trade every top and bottom, etc. So what he's saying is that he thinks he can both take advantage of the long-term trend, which already is, I mean, if you see some of these ratios, I mean, Jesus, I mean, the market average is 8-9% per year. If you just caught the big trend or the big change, you don't need any short-term trading. Because the returns would be so good, but very few are able to do that, of course. But it's like, these moves, yeah, this was like a, 9-year move. That still went from 1.4 to like 8. Hundreds of percent. And that's the commodity index. Imagine if you have some, you're above average in stock picking and have some juniors or whatever. Actually, the funny thing is that, okay, this is the broader commodity index. We know that gold, etc., topped out in 2011, which would be here. And I've shown you the Bear Creek mining chart, etc., and we also have, this, for example. These moves are large. For juniors, they tend to be even larger. Point is, okay, these charts suggest a lot of things for the next big long-term multi-year move. What's the big long-term change? They say nothing about the next week or month. There's no opportunity here if you're a short-term trader. You can't use any of these charts. They don't suggest a skew in either way. Because this could go down here and go up there and down there, whatever. This could go like this, wouldn't suggest much. This went even higher in the short term. It suggests about the big moves over the next 5 years. Right? So the opportunity in these shorts and the edge, how you actually take advantage of the opportunity, is only found in the long term. Only found in the long term. Which common sense would suggest that, okay, how do you profit from the next big move? Make sure you are in it over the long term until these big multi-year moves play out. And that's easy to say, but you see it all the time as well. Everybody's guessing where the price of gold, silver, miners, whatever is going to go tomorrow, next week, and as soon as a junior's read for like a week or so, you get messages like, what is happening with this, etc., etc. Like something has changed, no news or anything like that. like something has changed, and they're already, I mean, still grossly undervalued. It's like the move we had yesterday when gold broke out. Yeah, some juniors were up like 10-20%. Who cares? They are obnoxiously cheap. I'm expecting easy 200% moves in a lot of these juniors, especially when we reach, I mean, just the next sentiment high in miners, I would say. But if so, I mean, imagine you have a broad-based basket approach in juniors. Let's say you own 20-30 juniors in different metals too. Let's say they have a good project already, or at least have probable growth potential, and they're dirt cheap to start off with. Let's say you hold them for 3 years. You can't even trade them. You throw away the key, the password to your account or whatever, or you go into a coma or whatever. On average, let's say, those 30 juniors will indeed grow over the next 3 to 5 years. Maybe they have tripled their value, or more than that. Triple the value. Imagine if you also have then increase in commodity prices to boot, and you have the big sentiment swings, and you have, the TSX volume, so interest comes in big time, etc., etc. We reach, previous highs, and we're even, in more deficit when it comes to critical minerals or whatever, and the grades and production of gold miners, etc., increasingly worsening the supply. Think about how much more you would make than what the market average is, which is 8 to 9% per year. Why on earth would you squander that opportunity by trying to get every short-term movement right? Because then you're not even following the playbook. Because if you're short-term trading this, it doesn't matter what these charts show. It doesn't matter that they are at absolute extreme, generational extremes. Makes absolutely gives you absolutely no edge if you're a short-term trader. This is why I think this sector is incredibly boring right now, because there's probably, I don't know, maybe, but I doubt there's been a bigger layup ever in the mining space than we're seeing now. Supply is running out. Harder than ever to put something into production typically, and it's across most commodities. And the commodities are dirt cheap in light of, other assets, and also, since they should be, forward-looking, and especially the company should be forward-looking. A junior that is a developer or won't be in production in 10 years should be pricing in, it's impossible to do so, but like what the metal prices are going to be in 10 years when that actually gets into production. And we just know that we're underinvesting, so we're not finding enough deposits and not putting enough mines into production. And we're, again, already at like critical supply levels. It should be impossible to have a layup like this. Some other thoughts, like critical minerals inventories lowest in 25 years. At least the LME inventories were, around year end, lowest in 25 years. There was an article out. We have a stagflationary environment which benefits real assets. So if nothing else, there should be an added demand just from a wealth preservation standpoint. We have the fiat debt bubble. Yet said minerals and precious metals, critical minerals, are selling at fire sale prices in the ground. Pardon my French here, but it's like, how in the F should this opportunity even be available? To anybody who has some common sense and $100 or whatever. It's not like this is, a layup so big that you need to be an insider to actually have it available to you. Anybody could get in and buy these fire sale prices. When literally, everything is kind of lining up. It is truly absurd. And here's like big discoveries. 60% drop. and this is, I mean, from a long term, this is basically what we're seeing in the junior sector every day. And yes, people always do the, you know, it's easy to think like, oh, I mean, since these juniors can move so much, I mean, they can swing 20% in like 2 days, intraday even, and everybody starts to think like, if I just get every move right, I can make 20% every other day. I just sell here, buy here, sell here, buy here, sell here, buy here. Good luck with that. Nobody can do that. No, especially not in size. And then you have months, right? I mean, this is, I mean, of course, this is just a artistical rendition of whatever. But still, it's like if you have a growth company, for example, over years, and I mean, if it's a legit growth company, I mean, Great Bear, for example, that went up like 10, 20 times over 3-4 years. I don't know if this is suggesting, you know, 10 to 20x. Still, and you have, you know, K92, etc. You have some of those stories, and you have, I mean, some that are already gone up, like, I mean, Western Alaska has grown a lot, and I still think it's going to grow a lot more, and there's a bunch of cases like that. I mean, if you just almost, you know, nail yourself to the nail your mouse to the desk or whatever, and don't make any trade. You're just in, let's say, preferably margin of safety juniors with growth potential. So on average, your 30 juniors, on average, not every junior, on average, they are going to go up in value over time. So again, imagine if this takes 3 years to reach this kind of level. And, you know, critical supply getting worse, whatever. It's like, imagine we have a 3-year bull with a lot of corrections on the way, in between. Still, you get the big move right for the commodities overall, and minor valuations overall, and sentiment overall, and your juniors on average increase value by like 200% or 300% or whatever. That's a multiplier. Maybe you get, I mean, this is starting off at 1. Well, let's say this ratio, that obviously doesn't mean that the commodities have to 5x, but let's say the commodities go up, I don't know, 100%. Margins increase by, who knows, 400%. So value in the miners go up, let's say 400%. Okay, that's 400%. Then you have sentiment swing. Maybe that's worth 200-300%. So let's say we have, you know, at least 4 times 2, which is 8, and then this the juniors you own grow actually is like, let's say 200%. So you're up at 8 times 2. That's 16. So like 1500%. Let's say that takes 3 to 5 years. Do you think you would care about, yeah, which is pretty much impossible, but getting every short-term move right? In 3 to 5 years, most people lose money over 3 to 5 years. The market averages, again, the broad market averages 8 to 9% per year. It would not be even up to 100%. So you would be blowing everybody and their mother away, and the market and whatever, just from doing absolutely nothing but to pick above quality juniors, diversified across metals, whatever. Because the key thing again is make sure you are in it long term. That's why I keep saying that I don't like beta plays, pure beta plays, because there's nothing positive, let's say, to look forward to. If sentiment doesn't turn around in the next 12 months, it's going to be increasingly hard to just sit there and watch them do absolutely nothing, even go down in value and price. But many of the juniors own, I mean, the next 12 months, some of them have the most exciting 12 months ahead of them, where they could increase value by hundreds of %. That's what keeps me in the game, in, quote, frustrating times. And obviously, you should use short-term volatility in that case to add. If buying is done by default from a long-term perspective, and I've been buying since 2015 as often as I can, but increasingly so, buying by default is a better option than selling, simply because the big moves from here are up. If we're here, maybe actually selling is better on average than buying, sector-wide. Even though it's like a good story is always a buy if it's not grossly overvalued. But the point is, it's like staying power and using short-term vol, because the big gains is in the long-term moves. The edge, the only opportunity in these charts is over the long term. So you can totally waste this by trying to make sure you are out at every top and in at every bottom, like everyone else. You see it on Twitter. Everybody does that, and almost nobody makes money. Why do you think people brag about some individual trades, etc., but nobody ever pretty much showed their portfolio returns? So why on earth would you brag about something but not brag about the things that actually matter, like the long-term results? If you could. It doesn't make any sense. So it's like, So if that sounds crazy about, again, that this is mind-numbing, it's like, let's go to our pal Robert Friedland, who just happens to be a billionaire. He tweeted this, 27th of March. Well, he retweeted it, might have been later. Still, so it's like a week ago. Fed, financials, and S&P tech bros. Basically, everybody don't know what the hell they should be doing, and everybody's angry at everyone else, yada, 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 a lot of anxiety. I mean, I can understand that. It's like, why on earth would I be buying, let's say, Apple, whatever, but let's say Apple is at P20. I don't know if it is, but like, what's the opportunity there that I think it should be at P24? I see a 20% 3-year, value opportunity or whatever. It's like, that's not interesting. This is interesting. These are so extremely skewed to one side. It's not even funny. I mean, it's just literally the biggest layups in a generation. This would be Robert Friedland then. Me 100% in mining. So it's like, we can't be that stupid, and obviously he's not a short-term trader. Obviously it's hard for him to be one because he's a billionaire. But why is he a billionaire? Because he's obviously smart, common sense, and knows what an opportunity is. So if he's, quote, 100% in mining, why should we feel stupid in light of all of this to boot? I mean, it makes perfect sense. Makes absolutely perfect sense. Note, of course, that he is a billionaire, and obviously he would be rich even if his mining portfolio went to zero. But still, it's like, I mean, basically he thinks this is such a locked in, I mean, absolute no-brainer that he's, everything he can invest is basically in mining. Which, I mean, that's what I'm doing too. Everything I can, afford to lose, let's say, well, more, maybe more than that. These are just my 2 cents. But yeah, I've never been more bored. I mean, the markets are supposed to be hard. It's supposed to be, I don't know. Well, at least that was the thought I had when I started out. Like, you should be on pins and needles and worried, I got to get this exactly right. You need precision. There's no precision needed in this. These are, Jesus. These are absolutely extremes. If we would be up here, then you don't really know where the next move is going to be, up or down. Because you're in the middle. Now we're down here. I mean, here is zero. Yeah, you'll probably never see. I never expect. I mean, I thought the 2015-16 bottom was a great opportunity, and people still talk about that. I think the risk reward and the opportunity and the layup, everything. I think what we're seeing today blows 2015-16 away by a mile, simply because the juniors are not even pricing in all of these extremes. They're not. The future supply is not reflecting the trends of where the prices of future supply is for sure going to head. Unless we don't have a civilization anymore, then it doesn't matter, because then everybody is effed anyway. So it's like, you have to really train yourself. I mean, if gold was down $100 today, it doesn't change a goddamn thing, basically. Because again, these do not say anything about the short term. They inevitably say a lot about the long term. So every goddamn dip is by default not a sell, but a bigger and bigger buy, until all these reversions to the mean have happened. And we're probably gonna overshoot it. I mean, since typically the worse, the more imbalanced it gets in one way, the reaction to the other side is even more. And again, it's like we're in a stagflationary environment. We have a fiat debt bubble. We have the dollar shaking. We have the monetary system getting reworked in real time. And the supplies are lowest in 25 years. Everything is in favor for, everything jives. Literally everything jives. That this is probably the biggest layup you might ever see in commodities for the rest of your life. And to waste that on getting every 5%, 10% move in even metals right is totally misplaying the fact that you have been handed like 3 aces, not 2 aces, but like 3 aces. Yeah, I'm almost going insane. It should not be this easy. It should not be these it should not be possible to have opportunities like this. The market is supposed to be efficient. But I guess, I mean, it comes with the territory. 2023, I mean, have you seen more crazy headlines than this year? No, at no other time, I think, have people been more impatient, lacked more common sense, been more spoiled, etc., etc. If you actually are patient, are a hard worker, have some discipline, it makes perfect sense why you should also be able to reap abnormally large returns. Because being patient, disciplined, using common sense at all times has never been less of a crowded realm, let's say. It makes absolutely perfect sense. This is the time of Dogecoins, SPACs, tech, hopium, artificial stuff. It makes absolutely perfect sense why this would also provide the biggest layup in real assets that maybe the world has ever seen. And it's, again, my opinion, and Robert Friedland's. It's up to you and me how we actually take advantage of it, if we take advantage of it, or if we squander it like everybody else. Well, most people can't even see this. Most people are totally unaware this is even possible. Why most, let's say, I mean a bunch of retail, whatever, They're trying to get rich in the crypto space. The risk reward in this, in all of what you see here, blows the risk reward in crypto, at least average crypto, away by 1,000 times. Yeah, it is. I mean, yeah. So, anytime today, for example, we see somebody selling juniors, we know the world is still working as it's intended. People are making mistakes on a daily basis. Because I'm not 100% sure where gold should be trading. I'm not 100% sure how undervalued gold is, even though it's like, yeah, it's probably quite undervalued given that, I mean, these trends here, which suggest that their silver and gold is going to go up in price. Still, I'm mostly in miners. Freeland is mostly in miners. There it's beyond any doubt that the sector and the above average quality juniors are absolutely dirt cheap. So when you see on a day like this, when they should not at all go down, but they still go down because metals are in the red a bit, everything is working as intended. That is people who lose money in the markets voting with their feet. They're going to get fleeced like always, because they don't have a clue how to play this. I intend to try and make the most amount of money from these shorts and the most absurd opportunities I've ever seen. Yeah, again, bigger opportunities than 2015-16. Just know that. I mean, that should be your default. It's like if you see above quality, average quality juniors in any of these metals that are in demand and where supply is going down, any time at around these levels that you see they are down, that's somebody making a mistake. Sure, some could be forced selling, that they found something cheaper, like myself, for example, that I actually need to sell something. But that's a big exception, I would say. Most of it, 99% of the selling is done by people who are going to lose. Because again, it's like the broader stock market, 5% can beat an index in the broader stock market. I would guess it's actually lower in the mining space, junior space specifically. So that's the thing. It's like there's around a 95% chance minimum that whoever is selling stocks to you today, or you are buying stocks from, is somebody who loses money over time. That's why I assume the market is absolutely clueless. But you have to understand that. You have to be ingrained. You have to be arrogant in that way. To put your common sense, conviction, etc. above the market on any given day, because vast majority of people who are active make poor decisions. So if the market is betting against you, that's just a sign. If you understand all of this, that's just a sign that it's working as intended. That's why you can win, because everybody makes bad decisions all the time. Every time they make an action, there's a high likelihood they're making a mistake. And obviously buying and selling are actions. The dead, who can only hold, they outperform the living. They would hold this. I would, if take, I don't know who, but some person with a few different stocks. Let's say an average retail junior investor who probably is pretty crap. But I would take his portfolio if he did absolutely nothing for 3 years than 95% of active investors. Just to have him hand over the portfolio and I threw away the password, etc. I would take, or he had a stroke or a coma or whatever. I would bet that his portfolio would outperform 95% of people who are active in the junior space. Think about that. Yeah, consider me biased. These are just my personal opinions. This is how I think about it. This is how I look at these charts and opportunities. How I intend to play these. I don't expect to be out of this sector for quite a few years yet. And in the meantime, I'll make sure to put myself in the best position to make sure I am in it for the long term. And do whatever hell I need to do to not sell, but preferably buy short-term negative volatility. Yeah, so again, not investing advice. You do exactly what you want to do, but in my opinion, if you, I mean, this is probably a good video. I would say that, I mean, this, you could maybe, I don't know, bookmark this and watch this and just, you know, it's like why I watch a bunch of Warren Buffett and Monish Pabrai videos, etc. I'm brainwashing myself with common sense. And all roads lead to the long term being the opportunity. And in this space, it just happens to line up with the perfect long term opportunity right now. So to me, it's absolutely clear what you should do. Anybody who debates if they even should own miners, I know a friggin' idea what they're seeing or how they're thinking. This is what I think. Yeah, consider me biased. Don't invest money you cannot afford to lose. Always have physical gold and silver, etc. For starters, because that's literally the hedge to everything. This is still, you know, risk in return for reward, etc. Thanks for listening. Hit the thumbs up button if you like this stuff. Bye bye.